Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools Dan Kaplinger and Jim Gillies giving a 1 to 10 rating to the Canadian discount retailer that sounds made up. It's Dollarama, ticker symbol DOL on the Toronto Stock Exchange. We'll talk about the business first, including factors like industry and competition. Very competitive. A 10 is invincible. A 1 is hopeless. Still, Jim's at an 8, and Dan, you're at a 7.
Yeah, I'll tell you, Dollarama is real, and it is spectacular. It is a truly ubiquitous Canadian dollar store company. From Whitehorse to Gaspé, you will be able to find these dollar stores just about everywhere. It's not the only dollar store in Canada, but it's definitely the top one. And it's probably the only one that really has truly national scope.
I'm feeling very seen here with the Canadian references to the Gaspé there. That's nice. Dan's use of the word ubiquitous is spot on here. There are at least 3 that I could think of within a 5-minute drive of my house. It's everywhere. It's always full. In an inflationary world, people, if anything, have flocked there. They even have things like you can buy, base toiletries, base staple grocery goods. It's often a first place to look for everyday items. My kids have long known to go there for better pricing than, say, to Circle K, because, whatever they're trying to buy will be A, the same, and B, less than half the cost. I worry a little about what more worlds there are to conquer here in Canada. Again, Dan's word ubiquitous is spot on. But there's no denying the success of this company.
Yeah, I'll just tell you, we were talking about Couche-Tard just a little while ago, and Jim was saying, it's hard to find a candy bar for, less than $3, let alone less than $1. The last time I was at Dollarama, 91 cents for the Kit Kat bar. Gotta love it. And that's Canadian
dollars. Yeah, exactly. 91 Canadian cents.
All right. This sounds more promising than the dollar stores here in the U.S. I see some head nodding. All right, let's move on to management. Let's see if this holds up. A 10 is Warren Buffett. A 1 is Homer Simpson. Hold up, it does. Jim and Dan. Dan, you're both at 9s.
Yeah, I gave it a 9. CEO Neil Rossi. This is a family story. Neil is the son of the founder of the company in its current incarnation, Larry Rossi. But if you dial back the history even further back, it really goes 2 more generations to the early 1900s. Salim Rossi emigrating from Lebanon to the Montreal area to open up his first department store. Neil's been with the company for 25 years before he finally took over his dad's spot. Just done a really good job of building this business up from bottom up to make it just a national empire in the discount store retail space.
Yeah, I'm tempted to go kind of Charlie Munger here and say I have very little to add. This is a founding management team with great succession. They've stuck to a strategy that has produced 29+% annualized return since IPO. Is that good? That feels good. They've been long-term. They've acted like long-term owner managers, even though I suppose the one nit I would pick here is comparatively, the Rossis don't own a large percentage of the business any longer, but they still have, 9-figure value in there. It's just the success of the business has been better.
For financials, a 10 is a fortress, a 1 is yikes, Jim's at an 8, Dan, you're a little lower at a 7.
Yeah, Dollarama's had highly impressive growth. Sales have gone up, earnings have gone up, free cash flow has been strong. Pretty much the only area I see some choppiness is just in the balance sheet. Debt has grown over time. That's kind of a reflection of, as you grow your footprint, as you open new stores, it's kind of natural to take on a little bit more pressure on the balance sheet. But that's why I marked down Dollarama a little bit on this financial subscore.
Yeah, and I don't really have much to disagree with Dan on, even though I am at an 8. They are a little more leveraged than they have been in recent years. That may or may not be a problem. They do, as Dan mentioned, they do have great cash generation, and it's in a world where people are really turning to places like Dollarama to maybe make their paycheck stretch a little further. I mean, there's a societal argument in there that we might not want to look too closely at, but it is the way it is. So and Dollarama fills a niche. If I may steal from or fills a niche, if I may steal from David Gardner's Snap test. People in Canada would notice if Dollarama went away. I'll put it that way. Good capital allocation. I don't really see any cause for concern at the business level here.
Jim, let's move on to valuation then. How well will Dollarama stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
And my safety score is 7, and I'm gonna say from here I'm expecting forward returns in the 5 to 10% range, simply because pick any valuation metric you like, and we are flirting with all-time highs. The secret of Dollarama would seem to be out, and it's certainly, if you compare the valuation to some of the U.S. Dollar stores, you would be a little shocked. But this business is working. I expect it'll be closer to 10 than 5, to be honest with you. My big thing for Dollarama that I think they could move to their next range of shareholder returns, or the next level of shareholder returns, maybe get to that 10 to 15 range, is acknowledging that you perhaps don't have the growth prospects that you had in the past. Recognize that the U.S. dollar store space is a dumpster fire, so don't make any silly acquisitions. And I'm going to point to the post-global financial crisis history of Home Depot, where they decided to stop investing for new stores. They recognized that everyone in the U.S. lived within a 10-minute drive, or whatever it was, or 90% lived within a 10-minute drive of a Home Depot, and convert to a kind of a cash flow story. So they really pull back on the CapEx, really dial up the buybacks and the dividend hikes. And Home Depot, when they did that, it's been about a 22% annualized return since the middle of 2009. Retailers who think they have capped out network-wise can still do some amazing things if they alter their strategy, which I kind of think might be in Dollarama's near-term future.
I went with 5 to 10%, slightly lower safety score of 5. We've seen really big share price gains in recent years. We're at all-time highs, even with the current market weakness that we've been seeing throughout April. And so, I think there are some opportunities macroeconomically as consumers trade down, potentially due to tariff impacts, things like that. That might help Dollarama's business. In addition, there is some potential for international expansion as a possible additional growth driver, although there too, some risk in pursuing a more global strategy in the current environment. Nevertheless, 5 to 10%, pretty much a market consistent with my views of where the overall market's going.
Time for Top It. Jim, is there a company in Dollarama space you like better?
Well, I mean, on Fool24 and other places, I routinely make fun of people sniffing around the U.S. dollar store space. I literally called it a dumpster fire 2 minutes ago. Why bother playing in those? Don't go for the too hard stuff when you can just own the king in the space and go do something better with your time. So Dollarama's top dog for me.
Yeah, no U.S. dollar store. Any U.S. dollar store could only dream of having the competitive position that Dollarama has in Canada. It's just not going to happen. So no, I would not suggest a US-based dollar store over Dollarama for sure.
And I think that's a problem like a lot of us US investors who haven't been to Dollarama have. You look at the pictures online, they look similar, but the position there, less competition. I'll say I ran across an article where they were comparing prices to Walmart on like real stuff, like Kraft and Cheerios and things like that, not just the generic dollar store stuff. Came out ahead. I mean, but just the fact that it's a viable competitor to what like a Walmart goes to what Jim was saying earlier about, hey, this is like a real potential way for people to save money on real stuff. Dan, you might have said the same. But thank you to both of you because you're in agreement. You've given Dollarama a solid overall score of 7.0 out of 10. There's a lot of score variance there. Peaked at a 9 for management, which is a good thing. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, Fool on.
A lot of pressure to come up with a funny story, unfortunately.
Yeah.
We all have the mutually assured destruction here, I think.
Fair enough.